Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. So after last week's update video on the all-new senior deduction from the One Big Beautiful Bill Act, there have been a lot of questions and comments about, is this really above the line or is it really below the line? So we're going to hop over to irs.gov and check it out. So here's the URL where I'm getting this information, and we're talking about the new deduction for seniors. It says right here, taxpayer eligibility. The deduction is available for both itemizing and non-itemizing taxpayers. So let's clarify the tax words. Here is the standard definition of what we're talking about. If any deduction is available to you without itemizing, that means it's an above-the-line deduction. On the other hand, if any deduction requires you to itemize in order to receive the deduction, that means it's a below-the-line deduction. Now let's get tricky, because from the comments I've seen already, this concept as it relates to the new senior deduction is going to confuse about 65 million American seniors as we roll into 2025 tax return season. And the reason is because the IRS is about to pull a hybrid on us and jumble up all of the tax words, which will most certainly confuse the daylights out of everyone. But it's actually really simple, so let's break it down. Here is the line, right here on line 11 from a 1040 from 2024, your individual tax return. The line means adjusted gross income. That's what people are referring to when they say above the line or below the line. This is the line right here, adjusted gross income or AGI. Now, if something is an above the line item, then it will go here on either line 8 or line 10. The actual line number themselves is not that important, and it might change in 2025 as the IRS updates the 1040 format for OBBBA. But the key to an above the line deduction is that it relates to Schedule 1 right here. Now, if something is a below the line item, then it goes here on what is line 12 on the 2024 tax return. And below the line deductions either mean just your standard deduction or it means your itemized deductions if you choose to itemize. Okay, now what if the IRS gets tricky on us? What if they do this right down here? Here's the standard deduction for a married filing joint couple for 2025, $31,500. That is adjusted for changes under OBBBA. The $1,600 senior bump right here is the additional deduction already available to individuals age 65 or older. This item already related to existing law. This wasn't put into law under OBBBA. The amount for 2025, as I said, is $1,600 per person who is 65 years old or older. So let's assume for this example that we have two people who meet that criteria. So we have two additional senior bumps at $1,600 each. And then here is the new senior bump that was put into place under OBBBA for 2025 through 2028. It's $6,000 per person, as you know, so we're assuming two people in this case, so it's going to be $12,000 total. We are assuming for this example that this couple meets the relevant income thresholds, which we will go over later, so they are not being phased out and they get the full $12,000. So the grand total of all of these items is $46,700, and let's say that after the IRS updates the 1040 for 2025, it turns out that when you calculate this grand total right here, it ends up on this line right here on the standard deduction or itemized deduction line. And my question for you is going to be, is that an above the line deduction or is that a below the line deduction? By the way, real quick before we answer that question, how do we know that you get the senior OBBBA bump in addition to the regular senior bump, which was already available to those age 65 and older? And the answer is going to be right down here on this same IRS press release. It says this new deduction is in addition to the current additional standard deduction for seniors under existing law. Okay, so back to my question right here. If this is how the deduction is ultimately determined and where it ultimately ends up on the 1040 after the IRS adjusts the forms for changes under the new law under OBBBA, is this an above the line or is this a below the line deduction? Well, here is what's going to happen for the rest of 2025 and into 2026. Well, it's clearly above the line. The definition of above the line is that you get it even without itemizing deductions, which the IRS clearly says that we do. And then over here, you fool, the IRS clearly put the number below the line. Do you even know what a line is? Now let's stop for a second and think, what are these two fine fellows above really arguing about? And I think we can answer this question in the form of an analogy. Clearly, this glass is half empty. And over here, only a fool would say that this glass isn't half full. This, I give you my personal guarantee, is what you will see people arguing about ad nauseum in late 2025 and into 2026 tax filing season if the IRS pulls a hybrid on us, which they very well might. They may very well take a deduction that you get anyway, even without itemizing, and they may show it below the line mixed together with the standard deduction. So to summarize, if the IRS goes with this hybrid presentation, where they take a deduction which technically meets the definition of an above the line deduction because you can get it even without itemizing, but for presentation purposes they just lump it together with the standard or itemized deduction and put it down here on this line, that's when you're going to get this right here, people arguing whether it's actually an above the line or below the line deduction. So here's the key takeaway for everyone in the personal tax planning template program. Who cares? Who cares if it's referred to as above the line or below the line? Those phrases lose all meaning in this specific situation where a deduction you get even without itemizing is physically shown below the AGI line on the tax return. But what is important is that we understand you get this deduction anyway, again subject to certain income phase-out thresholds, which we'll go over in a minute, but you get it anyway regardless of whether you itemize deductions or take the standard deduction. And if you get it anyway, then which one of these three lines right down here it actually appears on doesn't make any difference. We want to focus on the forest and not get lost in the trees. But wait a minute, I still don't understand. What about the fact that the senior deduction is phased out based on your income, where income means MAGI, which is calculated as AGI plus or minus various adjustments? How can a phase out be based on AGI but then also impact AGI? Do you follow what I'm saying? Let's do an example. Suppose we have $100,000 of AGI, and for this example, let's keep it simple and just say we have $0 of modifications. Therefore, our MAGI is still $100,000, and we're going to say this does not result in any phase out. Therefore, we're going to take our AGI, which is the same number as MAGI for this example, and we're going to subtract off our senior deduction of $12,000, resulting in $88,000. Yes, it's true we would also take the standard deduction or itemized deductions down here, but let's put those aside for the minute and just focus on this one concept. If we take our AGI and we subtract off this senior deduction, which was not phased out at all, of $12,000, and we get this $88,000, what is this? What does this $88,000 represent? Is this $88,000 AGI? And the answer is no, it can't be AGI, because then we would have a circular calculation. If this was AGI, in other words, this was an above-the-line deduction impacting what the resulting AGI was, then AGI would turn into 88,000. From that 88,000, we would have to recalculate our MAGI, we would have to redetermine our phase out, and if there was no phase out, again, then we would actually be subtracting 12,000 senior deduction from $88,000 of AGI, resulting in $76,000. Wait a minute, is that AGI now? So now we're starting with $76,000 and we're subtracting off 12 and we get 64. Is that AGI? And so the answer is no. This mathematics right here does not make any sense. The deduction cannot be phased out based on AGI, i.e. MAGI, which is just AGI with a few modifications, and then also impact AGI as well. That's how you get a circular calculation, which doesn't work. And so this makes a pretty clear argument why the senior deduction is really more of a below-the-line deduction, even though you can get it without itemizing. Take a look at this Google AI search result right here for is the senior deduction in OBBBA an above-the-line deduction. It says there are conflicting views on whether the senior deduction is an above-the-line deduction. Some sources state that the senior deduction is an above-the-line deduction. For example, Keegan Linscott and Associates PC says that retirees see a perk in the form of a $6,000 above-the-line deduction available for 2025 to 2028. However, other sources state that the senior deduction is a below-the-line deduction that is taken after calculating AGI, which is what we just talked about. This is why we're going over this, because you're going to see both things for the rest of 2025 and into 2026. It's going to be called an above-the-line deduction and a below-the-line deduction all over the internet. But my followers here at Number Crunch Nerds aren't going to get confused by the tax words. It doesn't matter what you call it. The definition of everything in the law, in particular the tax law, is whatever we define it to be. It doesn't matter if they put it on this line up here, but just don't include the total in AGI while still referring to it as an above-the-line deduction. It doesn't matter if they put it on this line right here and refer to it as a below-the-line deduction. It doesn't matter if they create a completely new line which isn't even on the 2024 tax forms and call it something else. By the way, as a quick aside, you think they can't do this? You think they can't include it up here and somehow have it not total into this line? Look at this worksheet from irs.gov. Look at this line right here, number 22. Subtract line 21 from line 12. In other words, take what is ever on this line right here and subtract off this number down here and put it on this line. Is that math going in order? Does it have to go in the same order as each line? No, it does not. They can make it part of Schedule 1 and not have it be included in AGI. They can lump it together with the standard or itemized deduction right here on this line, or they can make a completely new line either up here or down here that has nothing to do with the lines currently on the 2024 form. Any of those options are a possibility, and we will know what the result is later on in 2025 after the IRS actually updates the 1040 for the new law and determines exactly where it's going to go. But the key takeaway I want want my followers to have is that the words don't matter. What matters is the concept. An item can't be both based on AGI and impact AGI. That math doesn't math. And this concept applies to many of the OBBBA provisions, including no tax on tips, no tax on overtime, the auto loan interest deduction, and what most people are calling the above-the-line charitable contribution, which, by the way, starts in 2026, because all of these provisions are phased out based on AGI, i.e. MAGI, which is AGI with a few modifications, and yet none of them require you to itemize deductions in order to claim them. So they are all hybrids. They basically meet the definition of both. They are above the line in the sense that you don't need to itemize in order to get them, but they are below the line because they can't impact AGI if they are also phased out based on AGI. That's why you're going to see endless confusion on the internet for the rest of the year about this topic, and that's also why you, as a follower of Number Crunch Nerds, are not going to get bogged down in the tax words. We're going to focus on how the mathematics really works. Let's go to the personal tax planning template. Okay, so we're here in the personal tax planning template version 2.0, which has been updated for the OBBBA provisions. I want to run through the ordering of the income and deductions based on the discussion we just had. So right here, as you know, we have our total ordinary income, and then we have our total long-term capital gain and qualified dividend income down here. The sum of those two is going to lead to our total income before adjustments. And what are all of these adjustments right here? Well, these are the Schedule 1 items. If you recall back over here on the 1040, all of these items up here, starting at line 1, which is cut off in this snapshot, but all the way down to here, these are your ordinary income items. Then we have our capital gain and loss items right there, just like we went over in the personal tax planning template. And then following that are these Schedule 1 items, which I mentioned before. Generally, when somebody says it's an above-the-line deduction, they are referring to a Schedule 1 item. And so that's what this entire section is right here. These are the Schedule 1 items, and you can see they are above the line. They are above AGI. And so with our OBBBA updates, I am going to put those down here below this AGI line. Again, I'm not concerned whether we call these below the line or above the line. What I am concerned about is they cannot affect this number if the phase-out calculations are based on this number, which they are. Just as an example, let's go to the auto loan interest phase-out calculation. So we're right here on the 10K auto loan interest deduction, and starting right up here is where the phase-out calculation occurs, and you can see that it starts with AGI. For example, in 2025 over here, married filing joint, we have $170,720. Coming back over to the main tab of the personal tax planning template, there's the $170,720 of AGI. So you can see that the auto loan interest deduction after any phase out has to come after AGI. It can't come before AGI, otherwise we would end up with the circular calculation. And the same thing is going to be true here with the charitables above the line, the no tax on tips, the no tax on overtime. For the senior deduction of up to $6,000 per person, I am going to put that one down here right below standard and itemized. Does it have to go below it on the tax form? No. Can it go above it on the tax form? Yeah. But again, we don't need to get bogged down in the definitions of all of this. What we know is that you can get this senior deduction regardless of whether you take the standard deduction or you take the itemized deductions. And because the phase out is based on AGI ultimately, it can't impact the number that is on this line right here. I could put the senior deduction up here in the Schedule 1 items and just make the total right here for AGI not include that number. That's exactly what the IRS could do as well, just like I showed you on that other form where you can deduct one line which is not next to another line. The lines do not have to go in order, even though logically you would think that they should. But remember what I told you in the members area videos about the ordering rules. rules. The IRS is going to have to determine if any of these deductions right here, including the senior deduction, which we have down here, if any of them will impact the AGI number used to compute the phase out for another deduction. Just as an example, let's say that we start with our generally calculated AGI right here for purposes of the phase out calculation on the auto loan interest deduction. But then it is certainly possible that this AGI number adjusted down for any deduction in interest could be the starting point AGI for any of these other OBBBA modifications. It could be the starting point of AGI for the senior deduction. We will only get the final answer to that once the IRS decides what the ordering rules will be and publishes guidance. Remember, Congress makes the law, but it is up to the Treasury Department, specifically the IRS, to interpret the law and to figure out the mechanics of how all of these new provisions will work within the context of all of the other existing rules and laws that they may impact. So if and when any guidance comes out from the IRS on the mechanics of how all of these will work in conjunction with one another, we can make any adjustments to the senior deduction calculator, the charitable deduction calculator, the auto loan interest deduction calculator, as well as the no tax on tips and no tax on overtime calculators. By the way, if you are an American between ages 59 and a half and 73 years old, and you have a significant portion of your net worth sitting in traditional IRAs, it is highly likely that you will soon be paying substantially more in taxes than actually necessary once you enter RMD territory. You have an opportunity to lower your lifetime tax bill dramatically through the use of the Roth IRA conversion income smoothing strategy, but only if you take action in your sweet spot years between ages 59 and a half and 73. The fact that the current income tax brackets and rates were made permanent under OBBBA is not the protection from excessive taxes that you might think it is. Without proper planning now, you may be on track to get hammered with excessive taxes in RMD territory without even realizing it. Look at some of these recent comments from existing members of the Personal Tax Planning Template Program. Right here, I wish I had paid more attention to the tax implications of retirement when I hit 60, and I have encouraged others to learn from my mistakes. I'm now turning 73 this year and am facing large RMDs. Or this member right here, your spreadsheet is amazing, as is all the work that you have put into it and all of the videos that are located in the members area teaching you how to use the personal tax planning template. It's like having a financial advisor report whenever I want for whatever changes happen or that I want to model. The personal tax planning template program is designed for everyday folks who are not tax professionals, who want to minimize their family's lifetime tax burden and want to keep as much of their hard-earned money as they can out of the hands of the government and in their own pockets. The personal tax planning template program comes with extensive and detailed video training, as I just mentioned, which is all explained by me in simple, everyday terms and will take you on the comprehensive journey through the world of tax planning that you have been trying to piece together for years. Lifetime access to the personal tax planning template program is available for a one-time purchase fee at the link in the description below this video. And if you're new to the channel and would like to learn more about the personal tax planning template and see it in action, then check out my currently 10-part Roth IRA conversion video series on YouTube, which you can find by simply searching on YouTube for Number Crunch Nerds Roth IRA Conversions. So that's going to be it for today's video. Thanks everybody for watching, and I'll see you next time.